is inflation day. We're going to go over inflation. I'll go over what this means, my thoughts on it. We will go over Cathie Wood's bought the dip on a stock. We will go over an IPO that is coming out. That's bullish. Pun. The Ethereum Treasury companies, we'll go over that. I was playing around with Seeking Alpha yesterday. They have now advanced charting, which is kind of cool. I bought a couple of ETFs yesterday. Coinbase, we'll go over that. Top utilities. We know that AI needs power. The top utilities, earnings, Circle, Archer, ONON, ASTS, and then we'll go over scans. So it's a full show. Where are we on QQQ? Well, you were up. You're up still in pre-market. Why? Because core inflation accelerates to 3.1 year over year in July, the highest print since February, but month over month it was down. So on a year over, that comes to a 2.7 increase compared to 2.8, blah, blah, blah. It just is what it is. Inflation is not soaring. That's the key. It says accelerates, but I don't think it accelerated. You can see the market, by the way. If we go and look at the market took off. It's coming back down. Again, any reaction in the market is an overreaction. You can see this is a 5-minute candle chart, goes up this, okay? We went up to 577 on QQQ, and you came back down. What was the high yesterday? 576. So we've touched a little bit higher. Do I expect this to go higher? It is painfully slow. This does put into perspective that September rate cut is likely. By the way, when I checked this morning, it was at like 70%. We're at 79% chance that the Fed cuts rates. So we haven't seen tariff inflation yet. And yet we're still not down to 2% in the Fed target. So Powell may be very, very stubborn. Maybe the governors are stubborn. We're going to know because Jackson Hole is coming up and we're going to hear some speak. He better talk about it at Jackson Hole. If you don't hear him mention it, then I think we're going to see a little bit of a pullback. Again, seasonally, we're expecting this pullback. We are 100%. Let's go back 20 years. We are expecting this seasonal pullback. We just haven't seen it. This is back 26 years. We're expecting this pullback into September. So why am I buying now? The reason is because it's never guaranteed. This is just seasonal data. So I haven't seen anything in this market. Earnings are coming in better than expected. The 4-hour algorithm just had you buy in here at 570, 570. You're trading at 575. Not horrible. You win 44% of the time. Your average win is 6.37. I use this to enter. Okay? We're right on this trend line. We're still in an upward trend. So if my timeline is 5 years from now, there's no reason not to buy. Again, earnings are good. It's clear the worst case scenario by economists on these tariffs hasn't played out. Expect Trump to be putting out messages. He's going to be on, Truth Social, which, let's be honest, it's fucking Twitter. Sorry. He's going to be putting out, and he's going to be attacking Powell. I mean, that's just it. Again, Polymarket is saying 79% chance that they cut. If they don't, expect the market to react. So any reaction is an overreaction. Let's talk about this because bullish will price tonight. This is a Peter Thiel backed IPO. Okay. The company, I have no idea what they do. I think it's a crypto exchange. It's going to be bullish. I mean, that's the thing. So here's what happened. It will price tonight and it will go public tomorrow. They had so much demand, they upped the price of the IPO. It was 28 to 31. They went to 32 to 33. And then they doubled down and they said, you know what? We're also going to issue more shares. Demand is huge for this one. Expect this to be just like the other IPOs. If you can get it, fine. I don't trade IPOs. I want to see the chart before it comes out. But if you'd like to get it, And if you have access to get it from your brokerage firm, go and get it. Don't ask me what I know about it, because I know everything that's in this article. The company said it will sell 30 million shares, up from the original 20.3 million. That's it. So if you want to know about it, read that article. That's the extent of what research I have done. And like I've said many times before, I don't know anything about IPOs, but when you have significant demand, the price goes up. But Peter Thiel backed this one. I'm sure he's in there with these folks. And he's telling them, you know what? Let's not leave $80 billion of revenue on the table. Let's make sure the IPO goes fine. Maybe it pops from 33 to 40. Maybe it pops from 40 to 60. We don't know the price yet. So you don't know what price it's going to be out there. And I'll tell you, one person with balls of steel, it's Cathie Wood. Cathie Wood has the largest testicles on Wall Street. Honest to God, she bought the dip. The trading desk. She bought the dip. She bought the dip. 725,000 shares. I talked about this one yesterday. I thought it was going to fill the gap above. It didn't. Filled the gap below. And then we created another gap. And you've got a gap now up to 87. She's buying the dip. I want to point something out to you. Before you start saying Cathie Wood is horrible, I want to point out, year to date, ARK is up 32%. Let's chart that against the S&P, because the S&P is up 8%. You have 4 times your money if you just bought ARKK at the beginning of the year. And remember, the beginning of the year was really good, except for the ARK funds. If you go and look at QQQ at the beginning of the year, where were we? We were right, let's see, on QQQ, you were 523. You're not up 32% in this one. You're up, let's see, let's just do a little math here, because 523 right there, you're up what, 10% on QQQ? We can go over and look at QQQ. Let's look at QQQ year to date. QQQ is up 12%. So again, Cathie Wood is doubling that one. And she's buying the dip. Will you buy the dip? And if you want ARK funds, by the way, and this is what a lot of people do, they don't necessarily buy the ARK funds. They go to the holdings. There are plenty of places out there that will tell you exactly what she bought and when. And they go and they buy when she buys, and they trade it on their own terms instead of paying a 0.75% expense ratio. And so she's been on there, and there's short leverage DTFs against the ARK fund, but she is very vocal, and she is fantastic. Understand, this is a super intelligent woman. She knows what she's doing. 10% of the fund is Tesla. That was why I bought the ARK funds back in 2016, because I didn't want to own Tesla. Instead, now I own Tesla through XLY. It's a strategy. But ARK is doing incredibly well. So I like the strategy. I think she buys the dip on a lot of this stuff. Understand, it's not always crazy. But if you look at, by the way, if we just bring up ARKK, one of the strategies you might want to think about is trading the 4-hour algorithm. She bought the dip yesterday. The entry on this one, $75 right now. Do you want to buy it? Because here's the thing that you have to know. The absolute low was 40 here in April. Okay, 40. If you had bought at the low down here, there's 100% gain right there. 100% gain in 100 days. About 100. 4-hour algorithm, it beats buy and hold 81% versus 62% in this. You win 42% of the time. Your average win is 12%. Again, she is beating the averages. If you want to buy and hold this one, then you take a look at a longer term. Again, it was under here. We just had the golden cross right here. Where was it trading during the golden cross? 70. Where are you at right now? 75. You may have more room to go. You may be going to this 118 on the ARKK. Again, Cathie Wood, I like her. Am I willing to pay the 0.75%? No. But I watch what she does. I absolutely watch what she does. And you look at the 1 month return, the 6 month return, you only get to down when it's a 5 year. Now, she promises to double your money in 5 years. She's had a rough time during that. But your 3 year return, 50%. That's fantastic. Your 1 year return, 81%. So before you go and beat her up, understand her funds are doing just fine. She is collecting your expense ratio and she's doing just fine. Now, BMNR, which is Tom Lee's company on Ethereum. This is the equivalent of MicroStrategy for Ethereum. This one has been nuts because I just want to show you a little bit. 5 days, you are up 85% in 5 days. 5 days, you're up 85%. Had you put $10,000 into this, it would be $18,000 right now. It is crazy. Now, the quant has as a whole. Why? The valuation. This one just came out. BMNR, I don't even think it has a buy in the 4-hour algorithm. It does at 32. You're at 59. I mean, this is nuts. You bought at 32 and you're at 59. What? This was August 6th, just last week. And it's up 7% in pre-market. So you've got to keep an eye on this. Now you say, well, what's all the rest of them? Well, here, Sam puts out, here's all the treasury companies with Ethereum. You got Bitmine, you got SharpLink, you got the Ether company, Ethereum Foundation, Pulse Chain, you got Coinbase, BitDigital, Mantle, Golem Foundation, BTCS. I know nothing about these. Nothing. But you can't argue with the performance. And I was playing around yesterday. Speaking of this BMNR, I was playing around with the Seeking Alpha. They just launched this, and I was just playing with it. This is a great tool. Now, maybe you have Seeking Alpha and you don't have. Let's just go to Apple, because the advanced chart on BMNR, it's not going to be great. But let's just go to Apple, because you can do bar charts. You can do different kind of things. You can draw on these. There are different kinds of things that you can put in here. You can do it against others. You can do colored bars, mountain, baseline, hollow candles, volume candles, data points, histogram. You can do all of these kinds of things. You can put a MACD in here. You can do all of this stuff. Look at the favorites. Look at the most popular. You can put Ichimoto clouds, MACD. Again, this is a tool in Seeking Alpha. I won't use this because I have TrendSpider. It's just a different tool. And if you don't have TrendSpider and don't have a favorite charting program, this now would become my favorite charting program. Honest to God, this would become my favorite charting program. Because it's got everything that you need. You've got the indicators. What you don't have that you have in TrendSpider is the ability to set alerts, like a MACD cross up, or if it's trading outside the Bollinger Bands, which Apple is. You don't have the ability to actually back test to see if a strategy works. You don't have the ability to actually, do a lot of the things that TrendSpider has. But you have the ability, you don't have watch lists and stuff like that that you can scan against. But it's really, really impressive. And again, it's on the front page. If you just go to a stock, let's go to Google, GOG. You can get that advanced chart, or you can just stick with the regular charting, either one. But it's another benefit to having Seeking Alpha. And I liked it. I liked it a lot. Let's see. Oh, Gunjan. This was a great video. And it's only a few minutes long. But it's a great interview, and her Wall Street Journal article is phenomenal. And what it does is it goes over why buy the dip has worked. And it's because younger folks haven't lived through 2000. Okay, they may have lived through 2008, but even 2008 was a buy the dip. And what I want to show you by, let's go to SPY, because SPY will have those. Let's go to a monthly candle here. And I want to show you, since 2008, buy the dip has actually worked because you've been in this upward trend. Okay? Had you bought the dip in 2000, it didn't work for 10 years. And then you started getting really cocky in 2003 until you pulled back there. You haven't seen those types of pullbacks yet. And when you do, buy the dip will be a longer term buy the dip. But it absolutely will be a longer term buy the dip. So if you're trying to time things, and you're going to have to be extremely patient in this market because there's a lot of money on the sidelines. And it's part of why I don't know if there's going to be a pullback. And if we do see a pullback, you're probably going to see 5-6%. So on those days when we're down 2%, if today's core inflation had come in, I'd be pouring money into the market. It's not going to be about when to get out. It's going to be about when to get in, because right now you're in a bull market. I bought some yesterday. I rebalanced things. I also bought more crypto ETFs at the all-time high. I bought them at the all-time high. Okay? And coin. Part of the reason I bought those ETFs was because crypto is going on a crazy run. Coinbase, which in the 4-hour algorithm beats buy and hold, 384% if you trade 26 positions over 24 months, had an entry at 324. You're trading at 319. Did I buy this one? No. Why don't I want to buy this one? The reason is I think under 300 is a better price point. Am I going to be wrong? Is this going to be Robinhood all over again? Is this going to be Palantir all over again? Maybe. But I'm not willing to throw it in there just nilly-willy and say, hey, the 4-hour algorithm got me and I'm going to do this. You got a great gap up here to 379, which would be a great one. But again, you win 42% of the time. I want to see it under 300. If we just look at a weekly chart, you can see the MACD is crossing down. The RSI still at 55. Every time it's been at 55, it has dipped even lower down to 39. So I'm playing the charts against it. I want to get into this one. I like the CEO. Okay? I like the CEO. And if you don't think the charts work, I just want to point something out to you, because charts do work. And if you get talented at this, they work really, really well. This is Disney. Now, I went over Disney many times before, and I've had this before, a lot of this, where you see a lot of this chart, okay? I drew this right at 121 right there. Why? Well, let's look. It's a previous all-time high, where you get back to at 2019, right before the pandemic, November 2019, before we saw the world shut down. And then you see this one at 121, that one at 150 right there. That's why I think we get back there, because it was there when the world shut down, and parks are at record amounts right now. The business is still getting rectified. It's still getting fixed. It's on its way. The 120, you can see right here in September 2020, when we started to go into the October low, that's where it held up. And that's where it shot up to almost $200. And then we've been on this slide until 2023, when you started taking off. And then April 2024 last year, you got up to 120. Boy, you slid right back down. You are in a perfect chamber right now. Do you get back down to 80? I don't think so. But right now, I'm not willing to take the chance of buying this one that it gets back to 120. The 4-hour algorithm works great over the last 2 years. So this goes back to 2023. You make 84%, okay? 84% versus 28% if you bought and held for 2 years. Your average win, 13%. You only win 35% of the time. If you'd like these stats, go and get TrendSpider. Go to Linktree. It's the top link. You can get it. $50 a month. It is a fantastic tool. Charts work. And when you have a strategy that works, it works well. Oh, and by the way, add into the strategy Seeking Alpha, which says that Disney's a strong buy. And you can analyze it with AI. and you can read all about it like you have a personal analyst for you. The positives, the acquisition of the NFL Network and launch of ESPN streaming service. The negative, streaming business, despite growth in subscribers, faces profitability challenges and faces competition from Netflix. I think they're going to do things right. They will clean it up, and they will be the second best streaming business. They're going to have ESPN. They're going to have Hulu Live. They're going to have Disney Plus. This is going to be a strong offering. So I like it. Again, add the tools that you have. And that's a tool that I have. Another one that I like that just got upgraded to the top stock is Micron. MU. This one's been on a run. Now, back tested over 2 years, it makes you 40% on 24 positions. You win 50% of the time. The average win is 16%. Got you in here at 108. You're at 123. What percentage is that? Remember, your average win is 16%. You're up 16%. Would I buy it now? No. Do I think it's going higher? Yes. Do I think it's going to use 100 or 97 as its support? Probably. If we see a pullback and this one pulls back there, that's where I would be looking to buy. Oh, and by the way, like I said, Micron, it's the top large cap stock. Quant rating of 4.97. Remember that score, 4.97. Its valuation, super cheap. It's trading at 15 times forward earnings. This is a chip company with memory that trades at 15 times forward earnings. Wall Street, they think that it's worth $149, which is 21% upside. It hasn't traded to 140. It's traded to 129. So I'm just looking at it. It's in my watch list, but I like it. And we know that AI is going to take power. Steve Kress goes over, here's the top utilities powering the AI revolution. He put together a portfolio of 4 of them last October. Last October, he put this together. Okay? The collection of 4 stocks has returned 47% since last October. The S&P delivered 10%. The only one that has not performed is PGE. The symbol is PCG. It's the only stock that lags the broader market. It's also lagged. It's down 26% since then. But he picked 3 out of 4 huge winners. So PCEG, by the way, he mentions the wildfires in LA and regulatory uncertainty. That's what's caused it to pull back. So again, these stocks are great. And if you want the utilities powering the AI revolution, get Seeking Alpha. It's a fantastic one. Now, I want to tell you, I watched this dude last night. This is Hank Green. Okay, he's got 2.4 million followers on YouTube. And by the way, I have anxiety over his background and the crash shelves and stuff like that. But he does a great job of talking about finance. He's a science guy, and he says, I don't know what's going on. Long story short, go and watch the video. But long story short, Hank basically makes the connection that he wants to put more money into small caps. He has a theory. He doesn't know that he's right. Nobody knows if they're right. Everybody has this uncertainty. And he's by no means, when you listen to him talk, by no means is he a financial expert. But I like his take. I like his take on it. And I took it in. I understood exactly what he was talking about. I went and did research. I went and asked AI. And it said it's a smart take. So it's again, an interesting thing to take a look at. Now, I would argue there are better ETFs than he put out there. Here's a full list of of every stock-based ETF that Vanguard has. A full list. These are low-cost ETFs. Go and do your research. Find something that makes sense. Again, he's doing IWM. I would argue VB is probably better. You could do mega cap ETF, MGC. You could do large cap ETF, VV. This is the complete list. It's a great list. Now let's talk about earnings, because earnings are coming out. This is an IPO, Circle, that came out and exploded. Exploded. This is the stable coin, okay? The stable coin business is exploding. You can see it here. It IPO'd back down here. It opened at 66, okay? It ran up in the next few days to $298. 300 is where it's at. It's trading at 177 right now. 4-hour algorithm got you in yesterday, right before earnings at 161. You're trading at 177. It shot up 10%. This was a really good quarter. They outlined 40% growth. And if you want to go full degenerate, there is already a double leverage ETF on Circle. Okay? 4-hour algorithm doesn't have you in, but there is already a double leveraged ETF on Circle. It is CRCA if you want to go full degenerate. But again, Circle earnings, they posted, they are good, and they outlined growth. The quant doesn't cover this one, so you're going to have to do the research on your own. There's a lot of things to understand here. The average price target, 193. That's 8% upside. But Wall Street, the 14 analysts that cover it, most of them have said hold, and it's based on that crazy valuation and fluctuation. If you go and look at the valuation, they're trading at 123 times forward earnings. The quant doesn't cover this, so you don't get your own, you have to do your own analysis. Throw it into AI. Now that they have earnings, throw their earnings release into AI and ask it, hey, can you analyze this like you're a 55-year-old Wall Street analyst and tell me like I'm a 19-year-old who just started investing? What I need to know. What's important? That's how you do it. And Archer Aviation came out. This is, again, this is one. It's up 1%. This was down 10% in pre-market. ACHR. Remember the thesis on this one. Because the thesis is not earnings. It's not earnings. They widened their losses. They are losing a lot of money. You're not investing this for its earnings. You're investing this for the potential partnership with Anduril, which is Palmer Luckey's defense company. Go and Google it. That's a private defense company that when they IPO, it's going to soar. Palmer Luckey is the guy who developed Oculus and sold it to Mark Zuckerberg. Okay? He's an Elon Musk style entrepreneur in the tech business. But Archer Aviation, Wall Street thinks it's a buy and they think it's worth $12. That's a 25% upside. And you're seeing the market, by the way. We can go into a 5-minute chart. This one dipped. You could have traded this just on confirmation, okay? Just on confirmation. When it got here to $8.53 and you said, oh, it passed that 9-day and now you're up at 968. Again, look at that trajectory. And when it opened up, we had a huge volume spike on it. And then you have ON Holdings. D-Man loves this one. I couldn't fit in the damn shoes. ON Holdings killed it. Double-digit beat and growth. They raised their full outlook. And where can you find these? You can find them all on Earnings Hub. In fact, yesterday I was listening to Shy. He said he bought Monday. And boom, you go over to the activity log on Monday. He said any reaction is an overreaction. He bought a bunch. And he bought a bunch this morning, just right now. He bought 33% more at 180. It's now 2% of his portfolio. So he likes it. Again, he's anti-software, and he went over this with this one yesterday, by the way. He went over this and said, hey, I like the company, but it's purely a trade. I don't think, he's just taking some money that he's taken off the table. He wants it working for him. He wants it in the market. And he's buying at 180. Why? Monday had a huge dip. But their earnings weren't that bad. I agree with him. Any reaction is an overreaction. You got a huge gap here between 188 and 244. Is it worth it? I don't know. I mean, let's go look at it. Monday from the 4-hour algorithm, it trades at 58% over the last 2 years versus 9% if you buy and hold. So again, I'd probably wait for the 4-hour algorithm to get me back in. And it will get you back in. It will get you back in at time. It might get you back in lower than when Shy actually bought it. Because maybe we're still on the way down. Maybe we're up. Who knows? But you've got a huge gap. And I like this company. Everything that they mentioned was good. They just brought their forecast down. That's it. We can go look at it. It's expensive. It's certainly expensive. Wall Street probably going to bring their price target down because it's 61% above where it's at right now at 291. You're probably going to see those downgrades. This one got all the way up to $342. And where did it get to 342? Let's see. Was it back here? Let's see. I think it was probably February. Looks like it. Nah, maybe it was November. Somewhere in that neighborhood. But it most recently was at $300 just back in July, the beginning of July. Analyze it with AI. Understand what you're buying. Understand what you're doing. One, that again, this one, ASTS, they went crazy down on their earnings. They announced earnings, I think it was yesterday morning. Yesterday morning. So, yesterday, I think, must have been in the afternoon. They announced their earnings. We can go look at it. It crashed. It crashed on their earnings. You can see it. Crashed right down there. Went all the way down to $42. Then they announced an aggressive, ambitious satellite launch plan. What happens? Stock takes off. Just takes off. Again, you're not investing in this company for their earnings. They are going to most likely have to dilute. I mean, I can't imagine. This is a space business. It's a space business. Wall Street thinks that it's worth $47. It's at $55. Want to know why? The short interest is at 16.33%. It's just classic short squeeze. Again, when they announce good news, it's coming out short squeezes. So do I like this one? I like this one to trade. I'm not in this. My money is not in this. I am not in this company at all. But it has been a fantastic trade. Want to know why? Because 28 positions over 24 months makes you 842%. Let's run the 4-hour algorithm and see where it gets us in. It hasn't gotten us in. Got us out with a 6.63%. Am I going to get into this one next time? Well, maybe, because the average win is 134%. 134%. Your largest drawdown, let's see, average return, average loss, max drawdown, 72%. So you have the opportunity to lose 72% or make 134%. Yours is the choice, but it helps you. Again, it guides me into this knowing exactly what I'm doing. So what earnings do we have coming up? You've got Rigetti, which is a quantum computer. You can see there's not a whole hell of a lot of buys here in the portfolio. Shai's not buying this one at 15. Sam's not buying this one at 15. They're expected to lose 4 cents per share. They lost 8 cents per share last time. What if they come in with a crazy number? I don't expect it. Again, earnings have been coming in crazy. If you got into this one a year ago, you're up 1,732%. The valuation is crazy. They are not making money. This is a market cap of $5.16 billion on revenues of $9,000. I mean, maybe that's $9 million. Again, the valuation is nuts. It's nuts. But the momentum, which this market has been going on, is incredible. 3 months, you're up 51%. 6 months, 45%. 9 months, 951%. Am I buying it before earnings? No. But let's see if perhaps the 4-hour algorithm works on this one. It does. And it got you in at 16.15. Now, it doesn't win more than it loses. It loses 72% of the time. Your average win, 77%. Same thing, high volatility. It's going to go up and down. You've got a gap up here, looks like to about 1835. Hasn't been fully filled. But again, you've been trading sideways. Does this one get the bump up? Maybe it's worth a couple $100 just to bet on this one. Maybe you lose a little. It's not worth it. I mean, valuation is not worth it, but maybe they hype something like ASTS did. Again, this is quantum computing. It's a low-hanging fruit where you can trade it. Find a strategy that works for you. If the 4-hour algorithm works for you, then take it. Maybe the 1-hour stock battle strategy that I have works. Let's see this one. This one over the last, 63 days loses you 9%. But if you just bought and held over the last 60 days, you made 40%. Doesn't really work. I wouldn't take the chance. Now this one, the 65-minute algorithm, this one over 8 months makes 89 positions. So you're a much more active trader. Your average win, 11%. Got you in here at 1562. You're still in. Does it get you out before the earnings? Maybe. But again, my tried and true is the 4-hour algorithm. So if you've got any questions, again, everything is on Linktree. There are tools that I use. The first one, TrendSpider. You can get access to TrendSpider. Sign up for the annual plan, and you'll get my 4-hour algorithm. But like I showed with the advanced charts, you can get Seeking Alpha Premium, and I always suggest the bundle. The bundle is Premium, which you saw me analyze those stocks with, okay, which you can get by itself, and you can get a free 7-day trial if you like it by using Linktree. But it also includes Alpha Picks. Alpha Picks is a portfolio that beats the S&P. Just last week, I added another, $50,000, $60,000 to my portfolio on this one. It's 30-something stocks, 2 stocks per month. They announce a new stock on 1st and the 15th. They tell you when to sell. You get access to the portfolio on day 1. There is no free 7-day trial. The performance, that's what you're paying for. 193% versus the S&P at 64%. And again, it's a very simple, manageable, easy portfolio. The heavy lifting is when you get started. I suggest the bundle. Why do I suggest the bundle? Because it saves you $160 if you were to buy them separately. And I get a lot of stock picks from Alpha Picks that I'm able to trade winners. Now, in the newsletter, I will provide scans, entries into the 4-hour algorithm today. There's a lot. Qualcomm, Bank of America, Palo Alto Networks, XLF, the financial sector. This is free. Sign up for it. It's at dailystockpick.substack.com, or you can go to Linktree and the newsletter's right there. I will also tell you I am trading triple leveraged ETFs, and I'm a full degenerate on Webull. Webull is down today. It got over $14,000 yesterday. We're at $13,943. Why? Stock that I invested in based on the 4-hour algorithm. The actual buy last week, I'm down 5% overall on this. It's down 5% today. It's been flying flat. But I like the stock. I like it. It's a leveraged stock. I have Apple, Google, iBit, Nvidia, Spotify, Tesla, and the double leveraged ETF that I bought based on a stock. So if you have any questions, again, Linktree, it has my email address, or you can just reply to the newsletter. I am going to go. I will talk to you guys tomorrow. See you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading.